to TradeSpoon. My name is Vlad. I'm CEO and founder of TradeSpoon. I'd like to cover current market conditions as we approach a very important Fed decision on the interest rates. It's kind of a make or break scenario again in the stock market, and I think there'll be a lot of volatility in the next few weeks. Before we begin, please take a look at the disclosures. I'm going to go through specific trade examples. So it's very important to understand the risk associated with trading options and stocks. You can find them on optionsclearing.com. And I also encourage you to review these disclosures. You can always pause the screen if you need more time to read the disclosures. All right, let's take a look at the market. First of all, looking at the stock forecast toolbox. Again, this is a model neural network. It learns on the data, only on the volume and price action, and makes prediction for different time intervals. So this is on spiders for the next 10 days. Models turn positive. It sees that the market is extremely oversold, very contrarian setup. Doesn't matter what asset classes you look at, they're all sitting at the medium-term, long-term support or resistance levels. So kind of a make or break scenario. Model sees that the bias is to the upside in the next 10 days. In the next 6 months, again, looking at the wider range, same model, but learns on the data, monthly data, as opposed to daily data. In terms of the month of September, support is 370.409. So as a result of the Fed decision, if we break through the 380 level, we will quickly retest the lows around 360, 370 level. If Fed decision is kind of status quo, we're going to be data dependent, raise 75 basis points. We'll see what happens in November. Then the market will rebound, and I think best case scenario to 410 level. And this is reflected here. I'm looking at the weekly chart. This is the last support level. We're either gonna, have a serious retest of 360, potentially trade below that level, or we're gonna go back up to the 410 level. I have both bullish and bearish position. SH, if you want to consider hedging, I would use SH, inverse spiders ETF. If you want to go long, I would pick strong stocks that are not as highly correlated to the market. One example would be aerospace and defense, Russia-Ukraine war, budgets across the world for the aerospace and defense is increasing. It's Northrop Grumman has been outperforming the market. So I'm long, but again, trading around this position, both 489, both 473, using dollar cost average. Still waiting for the 497 long NOC. I would be a buyer into pullbacks. You can see 6 months model shows an uptrend, so I think this uptrend is going to continue. Looking at the YouTube, please join me every week on Wednesday. Morning bell and closing bell without any financial commitment. You can actually participate live. We're a growing number of subscribers. We need to get to 1,000. So if you like the content, do me a favor, click on subscribe, click on like. YouTube likes, I like likes. So please click on likes. And if you find the content useful, most likely other people will find it useful too to trade. If you're part of any community of traders, please share it on a forum or a blog or social media. Thank you very much and have a great day.